Rajeev Varman, the CEO of Burger King. Thank you so much for taking your time out to speak with us this morning. Uh, just to start off with, what will the proceeds of your IPO be used for?
Yeah, good morning, first, and thank you for having us on your channel so we can talk about Burger King. Thanks for that. Look, let me just give you the specs of the IPO. You know, our band is 59 to 60 rupees. We have a primary of 450 crores and a secondary of basically 60 million shares at 60 that will make 360 crores that are offered for sale from our promoters, QSR Asia. Now, the proceeds from the 450 crores will basically go towards two major items. One is we have a 165 crore term loan that we used to build restaurants last year. And we're going to write that off. And then the balance is basically going to be used to build restaurants in the future, as well as for, general corporate purposes and any other IPO expenses and such.
Okay. At the time when you need growth capital, why are your existing investors actually exiting the company, or they're taking a partial exit?
Sorry, could you state the question again? Like half your question came through, the other half didn't come through.
Okay. At the time when you need growth capital, why are your existing investors selling?
Yeah, no, so we just did a rights issue just a few months back in May. And we actually put in 58 crores into the business, the promoters. We also did an pre-IPO just a few days ago, a week ago, with the Mansa for another 92 crores. So we have capital in the business. We have cash in the business, and that's how you go out doing IPOs. Is you don't drain the company and do an IPO. So I think we are comfortable. We have a lot of energy around Burger King at this point, a lot of energy around Burger King, a lot of excitement around Burger King. We were doing this, as you would recall, some time ago before the COVID hit us and lockdown. So we waited until things opened up, and that's why we are back in the market.
Why is your price band slightly higher than the preferential allotment made to Amansa?
So Amansa just came in, at 58.5, if you can know. And, this process was done extensively. I mean, we have 4 banks involved. We have, we did an extensive roadshow, not just domestic, but also globally, internationally. And a rigorous process of both globally doing this roadshow, as well as, the effort that was put by, building the books. This was the result of all that exercise, and I think it's a fair number that we see, and the promoters accept that, and we're moving forward with it.
Okay. For how many years will this fund, the capital that you're raising, be able to fund your growth?
Sorry, could you say that again?
For how many years will the capital that you're raising be able to fund your growth?
Yeah, good question. So we have a commitment today to build 700 restaurants by December of 26. And this capital, in addition to all the proceeds coming out of our business operations, in our view, are going to be sufficient for us to take this journey forward.
Okay. And can by 2023, what is your store expansion plan? If you could elaborate on that a little.
Look here, our numbers are, in the DRHP, what are committed, and without making any forward-looking statements, if you just reflect on that, you will find, that we have captured their growth numbers. What we do intend to is, and which we have committed to, is building 700 restaurants by December of 2026.
Okay. The company's performance compared to the other QSR chains in the country has been a little has not been that far. So what would be the reasons, for your subdued performance compared to your peers in this industry?
Yeah, so you would appreciate that we have just come in at least 2 decades after most of the other companies that are here in the QSR environment. So we are a very young company, and we have a massive, path ahead as we move forward and build a restaurant. So our first restaurant opened in November of 2014, and we only have 268 restaurants on the ground right now as we speak. So a lot of work to do ahead to build this the business and get it to 700 restaurants in due time. So that's what our total plan is. What's great about our brand is if you look at our brand, we have a master franchise agreement, and this master franchise agreement is an exclusive agreement. It's one of those agreements, which not only allows us to basically run the business, but also to run the brand here in the country, to build the products, to build the supply chain, to do the marketing. Everything is not only under our control, but is something that we do, at Burger King India. So that's a massive advantage that we see. And then we are leading and growing a brand like Burger King in India, which is, one of, it's the second largest burger brand in the world. It's in over 100 countries. It's over 18,000 restaurants across the world. Its awareness globally is enormous. So we are blessed that, we kind of shook hands and did this a few years back at Burger King. We have Burger King in the JV with us. So they're fully invested in terms of their not just financially but emotionally into the brand here on the top line, on the bottom line, and such. So this brand has been doing fantastic. Even something that is 4 or 5 years old. If you look at our sales in F19, we did 29% same-store sales growth, and that was not just same-store sales growth. That was same-store traffic growth as well. So enormous growth that we did together, and so we are well set to move forward in terms of our growth story, and we feel excited about what we're going to do.
Okay, and in the first half of the year, can you tell us what was your same-store sales growth?
Sorry.
In the first half of the year, what was your same-store sales growth?
So in March, if you can appreciate that everything closed down last week of March. I think 21st of March, everything closed down, and so after that, we started opening our restaurants. We were regarded as essential services, so we were able to open some restaurants. And initially it was just takeout or delivery, and then slowly the rest. So if you look at the total sales that we have done, in the last 6 months, if you take it, the previous year and you look at the sales for the first 6 months, it was 419 crores. And if you look at the same sales of the past 6 months, it's only 34 crores. So obviously, because of the close down and because of slow recovery. But the good news here is we have opened 249 restaurants today. We own 268. Out of that, 249 are already open, and we are kind of happy about that.
Okay, and how has the contribution of takeaway increased compared to 2019? What does it stand at today for Burger King?
So the aggregators, we were the first ones. Burger King was the first ones to actually shake hands with the aggregators. We started building that business, 3 years ago. It's a substantial portion of our business, and it continues to grow. We don't think there's going to be a major change in the long run between the split between takeout, delivery and dine-in. But we are prepared, to build that business. We just launched a new app, and this app, might I say, is one of the best apps that I've seen, and I've been in this business for a very, very long time. And this app is actually will be launched very soon. It's launched, but we are not putting a resource behind it as yet. We will start doing that very quickly. This is the first app in India in the burger sector which actually has a loyalty program. It has analytics, it has CRM, it has gaming, rider journey. I mean, this is going to be one of the top apps. The reason I'm sharing this with you is, when we opened up, this app was not just designed to do work on the delivery side, which we are going to. We are going to do a substantial amount of business in the future with this app. But what this app was also designed in such a way that you can actually go into our restaurants and you can actually use this app to place an order. You don't need to get online. You don't need to go up to the front counter. You can go sit down and you can place your order from the app, and you can get an intimation when your order is ready. So a lot of work was done, and we understand every time we do something, we're just not doing it with a single focus on either delivery or on dine-in. We are doing it with a focus to grow both the businesses, because we think both those businesses will continue to grow.
Okay, but has the pandemic caused you to change your store sizes in any way? Would you look at opening more on takeaway stores than dining stores? Will that change?
Yeah, so we started, when we started building restaurants, we were building restaurants, the ones on high streets, they're anyway 1,800 to 2,400 square feet. We are building our, mall restaurants anywhere 500 to 1,000 square feet. We then thought it was a very good optimum size to build. We continue to think that that's the size that makes sense for us. So there's we'll continue to, we're experimenting a lot of things, and we do that every year. We continue to experiment, and that's pre-COVID and during COVID, and will not stop post-COVID either. We continue to experiment a lot of things, but we're comfortable with the size of restaurants we build. We do think that there will be a heavier emphasis on building drive-through restaurants, and we were the first ones to go into metro stations. And if you look at our restaurants in the metro stations in Delhi, they're fantastic restaurants. Some of them are inside the metro stations. Some of them are just outside as you step up. We've got restaurants in airports, in Delhi airport, and in Hyderabad, Bombay, and Kochi airport. So we'll continue building that. So there's a lot of growth that we see in these sectors. We also see a lot of growth on highways, as they build up, and the rest stops are built up. We see a massive potential to build on highways as well. And these would be relatively larger restaurants with drive-through, with a large parking lot and such.
Okay, so is it safe to say that we see more standalone stores from your end than stores that will open in malls?
Yeah, so we get about 15, 20 malls in India on an annual basis, and that's what they build. And so we'll build those restaurants, and then beyond those restaurants, we will continue to build high streets, continue to build drive-through restaurants, continue to build restaurants in metro stations and such.
Okay. When do we expect you to turn profitable? Because your
So,
losses are
yeah,
biting
so
too.
we are when we build a restaurant, usually in the first year itself, at the restaurant level, we get profitable, and there's a positive cash flow coming out of those restaurants. But you have to appreciate, we are only about 5 years old, and we have put in a substantial, large team to put together 700 restaurants in the future. So that's the plan for us to move forward. And with that comes a lot of depreciations, a lot of investment in capital. So that's going on right now as we build restaurants, and we see a bright future as we move forward in this.
Have you been able to renegotiate any of your rentals, and what is the savings that you've seen because of this?
Yeah, we have done a fantastic job. I think our development team has, and thankfully a lot of support from the landlord community as well. But a lot of work was done, and I think we have built a good relationship with them. We've got a lot of support from them. Some is short term, some support is longer than short term, and not only just our landlord community, but around us, our vendor partners, our suppliers, and so forth. I think everyone's pitched in. I think it's brought our community together, this pandemic, and I think everyone has shown up to support moving forward, because they believe in the story. They believe in our story to move forward. So that's why.
Okay. Thank you so much for taking the time out to speak to us.
Thank you very much. Thank you for having us on your channel. Thank you very much.